I would like to talk about your loss that may not be taxable. All right, I've had so many conversations this week with different clients because, as you guys know, today is the first day. Let me say it again. The first day that you can file your taxes, e-file your taxes with the IRS. Today is the first day. So if you're watching this live, put in the comment section, first day to file your taxes, so I know y'all are here, okay? All right, with it being the first day to file your taxes, I want to talk about the conversation I've had this week two times, okay? All right, so I had a client who sold their house. And they were very concerned that when they sold their house, they put a lot of money in the house, and they wanted to say, I need to recoup my losses. Well, let's talk about when you sell your house real quick, and I'm going to try to do this quick. If this is your first time catching, look, I'm going to go through a lot of stuff. I'm going to go through fast. If I go through too fast, watch the replay, because I promise you, these nuggets will bless you. Okay, you sold your house, and this is your first. And you're wondering about the $20,000, the $50,000, the $10,000, the money that you put in this house that you lost, getting ready to sell it. Okay, that loss, it's not a direct dollar for dollar loss. First of all, if you lost money or you put a lot of money in selling your principal residence, okay? Your principal residence. Your principal residence is the home that you live in, okay? When you sell your principal residence, there are loss limitations or gain limits. If you sell your house and you make $100,000 when you sold your house, that money is not taxable on your tax return. That's what my client did. She sold her principal residence, but if she had made $100,000 when she sold, she would have to pay no taxes. Same thing when she sold the house and she lost money on the house. It's not a tax loss when you sell your principal home. Okay, now, let me back that up or come back a little bit on that, because I know that, I'm the accountant, right? When you sell your house, let's say if you were selling your rental property. If you were selling your rental property, yes, you do get to capture the losses on the rental, and yes, you capture the losses, the gain on the rental in that same vein as well. The way you calculate loss is not based on how much money you spent last year trying to get that thing sold. That does not determine what the loss is. What determines the loss is how much did you pay for the house? Okay, you paid $400,000 for the house. You sold it for $350,000. Okay, so you take how much you bought the house for, which I think I just said $400,000. You put $20,000 of expenses to get it out the door. So essentially, the house cost you $400,000, which is a cost, plus the $20,000 in repairs or upgrades that you did. You spent $420,000 on the house. You sold the house for $50,000. For $350,000. The difference is $70,000. The loss is $70,000. All right. I'm going to move on from that. The next biggest thing I get is, I lost so much money in my business last year. How do I account for the money that I lost in my business last year? Okay. Business losses, number one, are calculated when we take our revenue minus our expenses. And the difference, if the expenses are greater than the revenue, you got a loss. It is not a loss when your customer does not pay you. Okay? So let me explain that. And I got my board here, but I don't have my marker. I may have to run and get a marker because I think it's better explained if I go get my marker, but I'm going to do it verbally first. All right? So if your client did not pay you and you didn't send the invoice to them, so that means that you sent the invoice, maybe you did the invoice in Word or through another system or whatever, but if the revenue does not show up, there's no loss to report. Okay? So, but you had the expenses maybe associated with it. So let's say, for example, you were doing, and I'm going to make it simple. Let's say you were doing a website for someone, you're a service-based company. You were doing a website for someone, and they didn't pay you to do the website. But you already paid somebody on Fiverr $300 to do it. But you charged the person $3,000 for the website. So the loss is not the $3,000 that you lost because this client stiffed you. The loss is the $200 that you paid the dude on Fiverr, because the $200 loss should get captured in your financials. So I hear all the time businesses saying that, oh man, I lost so much money on that contract. It was a $10,000 contract and the client never paid me. And, I need to put that $10,000 loss on my taxes. No, ma'am. No, sir. That's not how this works. That's not how any of this works, okay? The loss is not the fact that you lost out on the revenue. Losses are triggered by expenses. That's the easiest way to say it, y'all. If you did not truly expense it, number one. If you did not truly pay it, number two, it is not a loss. Okay, now that takes me to my third situation, which is the most popular loss that I hear about, that people say that they want to talk, and oh, I got to get my money back. And number one, because we're in the Rona, it is a loss, rental losses. Let me just say it, rental losses. If you are a property owner, I'm a property owner, I rent, we also do Airbnb. And so the thing with that is, they have this rent restriction going on, right? And it's such a pain in the butt because, as landlords, you may have a tenant that's not paying you your rent. So I will have clients, or, they will come in and say, the rent is $1,000 a month, and normally they would collect like $12,000 in rent, but right now they've collected $2,000 because when Rona hit, the person didn't pay any more rent. So so they want to take the $10,000 loss on the tax return. No, the $10,000 is not the loss, okay? And it's not that you don't have a loss. But let me explain to you guys what the loss is, okay? Just like I said in the title of the video, just because you have a loss, that does not make that loss taxable, okay? And how does a loss become taxable? All right, like I said, number one is an expense that you've recognized because you paid it, okay? Or you've incurred it. All right. So in this situation, you have a rental property. The cost of renting the property, and I'm going to just say in this situation, your property is paid for, just to keep it simple. So if you don't have a mortgage on your property and your tenant's not paying you, right? The only expense you have is your property taxes and the insurance that you keep on that property, because more than likely the tenant is paying the utilities. Okay, so in a normal year, when the tenant pays you $12,000, you would turn around, take that $12,000, pay the $3,000 in taxes and insurance that you normally pay, and your net income from renting your property is $12,000 minus the $3,000 of expenses. So you got $9,000 of income that you would put on your tax return, and that $9,000 of income gets taxed. Okay, now we're in the Rona. Okay, it works the same way. The tenant paid you $2,000. Okay, your expenses is $3,000. 2 minus 3 is -1. The loss is $1,000. Okay, the loss is $1,000. Why is the loss $1,000? Because you received $2,000. You actually paid out in taxes and insurance $3,000. Okay? 2 minus 3 is -1. The loss is $1,000. It's not the $10,000 that you lost in rent. So, and I know, if this is a common question that I get answered, because people are like, but I lost money. I lost money. The money that you lost is not the money that you didn't receive. Let me say that again. The money that you lost is not the money that you did not receive. The money that you lost is the money that you paid out or that you now still owe. So if you don't still owe the money out and you don't and you didn't really pay the money out, then it's not a taxable loss. Yes, it is money that you did not receive that you were expecting to receive. And that's all it is. It's money you did not receive that you were expecting to receive. So it's a loss for you, but it's not a taxable loss. I hope I answered that question for you guys. And the play works the same. Whether it's rental property, whether it's, hey, I could go on and on situations like this, right? Okay, I was talking with one of my other clients and, my stylist, and she was saying that, we had an example about inventory. If your inventory, you had an issue, the inventory was bad, you bought the inventory and it went bad last year, or the shipping company messed up the inventory, they didn't give you a refund on it simply because you was doing t-shirts and you misspelled the word. It's not their fault that you misspelled the word. So you bought $2,000 worth of t-shirts and in 2019 and you were getting prepared to sell them or whatever, and they're still in your inventory, or let's say you had them in your inventory and instead of the retailer messing it up, let's say for example they were in your garage and they got wet and now they're not sellable, and you bought them in 2019 December. That means that you took those possibly on your taxes in December if you're on a cash basis. Now we move on to 2020. The Rona hit, you got these bad shirts, you got to reorder them, and so you paid $2,000 the first time, you paid $2,000 the second time, you spent $4,000 on these shirts, right? But you're going to say, hey, you know what, I had an order for those shirts, and somebody was going to pay me $8,000 for those shirts. I lost $8,000 on that deal. So let's say the customer said you took too long, you got too many issues, I don't want the shirts no more. You did not lose $8,000 on that shirt, on those shirts. You lost $4,000, which is the cost that you paid for those shirts. Number one, they were damaged. Number two, you had to buy them again. So the total cost is $4,000. I think I've driven this point home. Y'all let me know if you're watching this on replay or anything, if this is blessing you and you've gotten something, because I think this is important for us as business owners and as just, property owners and taxpayers to understand. And if you're watching this video and you're breathing and you live in the United States of America, you are a taxpayer. All right? And it's important for you guys to know this stuff. All right? I believe in having a fit business. Whether it's a rental, whether you just are a property owner or you rent property, fit. Fit meaning you got financials. I'm going to go to my board here. You got financials. You are properly incorporated, meaning you're protecting yourself and you're in the right tax structure and you're doing your taxes and have no tax problems. All right? Fit. Now, if you want your business to be fit and you don't yet have financials or you're looking for an accountant, you can work with me by by going to our website. The name of my firm is X Financial. You can reach me with www.xfinancialcpa.com. Or and you can book an appointment there, or you can join me for coffee every Friday. Just go to www.coffeewithspiceda.com. That's what I got for you guys. But I had more topics here I'm going to cover real quick because this is the first day of filing. Y'all don't mind if I go over a little bit because I drove home this losses point quite a bit. So let me say this. Yes, again, hey, Dr. Pam. Yes, today is the first day that you can file your taxes, okay? Getting best prepared to get your tax deductions. I told y'all what to do with our FIT accounting system. If you don't have your accounting system, right, you can, we are offering the full year of accounting. Like the full accounting system, meaning where you put your input in, where you sync your bank account in, where you sync your credit card in for $99. So there's no reason. That's less than $8 a month. And if you have a fancy coffee like I drink, that's a cost of coffee. But so I can say for the cost of some boutique fancy coffee, you can have an accounting system that protects you. Number one, protects your profit, because you want to make sure that you're watching your profit. Number 2, it protects you from the IRS. And number 3, it just makes sure that your business is all around fit. All right, $99, the cost of the expensive coffee. So if you don't want to do your stuff yourself, that's fine. I just want to make sure that you have a fit business, and that starts with an accounting system. All right, let me see. I want to make sure I cover everything. Oh, STEMI. Y'all, when you file your taxes for 2020, if you did not get your stimulus, okay, you need to be prepared. If your accountant doesn't ask you, you all need to be ready to tell them, because if they forget to ask you, that's going to mean that you're not going to get your stimulus money. So if you didn't get your stimulus check the first round or the second round, make sure you tell your accountant, because the stimulus check will get added to your tax refund. Now, if you owe the IRS, I'm not sure if they're still going to pay it to you or not, because it is, in my opinion, I mean, I'm not a legislator or anything, but, I'm just a humble accountant over here, but I think that the point of the stimulus is to help people get ahead. So hopefully the stimulus money, when it comes to you in the form of a refund, if you have previous tax debt, my prayer is that they will send you that money and not apply it against your old debt. Okay, what system is that? Oh, it's Xero. It's Xero. We are a gold partner with Xero. We do work half of our clients are on QuickBooks, half of our clients are on Xero. We are offering Xero accounting system. It's $99. Okay, so if you want that system, to make it really, really simple, I will come back here to Combos and Coffee and just post like a meeting link in there for it, so that you can just book it like it's a calendar link or something. I'll get it right. I'll get my automation team to get it together, because we're working on it for Monday, but I'm talking about it today. I'm always talking about stuff early, but I've been talking about this for weeks. We're just kind of like getting everything set up, but it is Xero accounting system. Okay, we are gold partners with Xero. I'll let you guys know. I'm also a pro advisor for QuickBooks. I'm also, I'm also a CPA. I've also worked for Big Four accounting. I'm also like a degreed accountant and all that stuff. So if you've never met me before, this is who I am. Spiceda Jackson. I'm the only Spiceda in the world. So let's see. Yeah, if you got QuickBooks and you hate it, let's move you over. What I love about Xero is, and I'll tell you guys, I love that Xero makes it where the non-accountant, which, business owners, if you don't have an accounting degree, and even if you do, you could be rusty. Okay, if you're not practicing every day, you're rusty. So, I think that it prevents you from messing up your accounts receivable. One of the biggest problems I see with people who invoice using the QuickBooks system, and they're not applying when the customer pays. If you're not applying that payment properly, you're double counting your income. So double counted income, which equates to overpaid taxes, or you overpaying in taxes. That mistake happens often in QuickBooks. Xero has an automatic internal control set in place to prevent that from happening. So that's why I offer Xero to my clients first, especially, if you're doing it on your own. If you want to book to get your taxes done with us, there's the link to book the taxes. She put my Calendly link there. You can also go to my link tree if you're watching on Instagram. I'll add the link if you just want the software. I'll add that to my link tree later this afternoon. I'll just make it like a invoice or whatever. So, or you can just go and fill out our client information form. The bit.ly link, I'm going to put it here, is bit.ly/tax plus 2020. Tax plus 2020. Okay, bit.ly. You could go there, fill out the client information form, let us know what you want to do, and we'll get you taken care of. Okay, or you can just book an appointment for us to do your taxes if you know that you want that to happen, and just put it in the comment when you book your appointment, and we will get you set up prior to your appointment time. All right. Okay. Wait a minute. Let's see. I'm so excited and stressed out at the same time, y'all. It's tax season. Okay. I'm not stressed out, but it's just a lot. Okay. What's going on with the stimulus? I told y'all that. I'm still here to answer PPP questions. So I That's another thing that I deal with a lot throughout the week, y'all. The PPP. A lot of business owners are stuck still trying to apply for the PPP. And the PPP is still open, okay? You apply for the PPP with a bank. I say a bank because it's a bank. It doesn't have to be your bank that you bank with. It is best to do it with your bank, but you apply through a bank. It is an SBA issued loan grant to small business owners through the CARES Act, through the stimulus plans that Congress have put out for small businesses to stimulate the economy and help us small businesses throughout this, economic not just the pandemic. It's just a pandemic. If you're being affected by the pandemic, they want people to still be employed. So employers are being given money for paycheck protection. PPP, Paycheck Protection Program. The loan is forgivable if you truly use it, majority of the funds for payroll. So what I've noticed is that for S corporations, it is common, and there's no shame on this, but it is common for S corporations and C corporations and small businesses to incorporate as such, not process payroll. And so if that was you and you did not process payroll, you may hit some roadblocks along the way to try to reach this PPP free money. And one of the things I've noticed, particularly with Bank of America, is when they add, if you're the only owner and you haven't yet hired any employees, people are struggling to validate payroll. All right, because what they're asking for is a Form 1065-K1. Well, if you're an 1120S, you have a K1, but you don't have a Form 1065. You have a Form 1120S. What I said that if this is you and you find yourself in this situation, you see the 1065-K1, just know that the 1120S and K1 is an equivalent. I'm not sure if the bank will accept it, but is 6 in one hand, half a dozen in the other. The difference between the two is with the 1065, employment taxes are taken against the net income, and with an 1120S, no employment taxes are taken. So it's not considered a wage in the eyes of the IRS. And so I'm assuming that the SBA is possibly taking that position too, which is why it's been a struggle. There are a couple of ways to get around that or to work through that. If you can, you can book an appointment with us. Laura put the link there. We can discuss that. The cost for us to actually walk you through the PPP is more than the price that's booked here, but I don't mind having initial conversation, even to just jump on and just show you on a quick call. What I'm trying to do is carve out some time with all the stuff going on to do a quick webinar that I can offer, because I literally have about 10 clients right now that would love that and would benefit from that, including you guys out here watching live that may not yet be our client. I'm sure you guys will be blessed by that. So we're working on being able to jump on a webinar or Zoom and invite you guys there, because we're here to help. We're a small business. I want you guys to survive and thrive. I love you guys. I'm so appreciative of you showing up every week. Let me know whatever content you need, how I can help you guys just get through this. We're in the pandemic, and I know that sometimes it's just tough to get access to the money, all right, as small business owners. And, to make that easy, guys, all you need is your financials. So if you're applying for the PPP, make sure that you have your financials. If you don't have your financials, at least you have your 2019 taxes done. All right. I know last year was a tough year. If you still haven't had your 2019 taxes done, guess what? The e-file system opened today. We can file those taxes e-file starting today. Now, I don't recommend mailing anything to the IRS these days because, they're working virtually too. So I think that, there is somewhat of a delay in processing things, like an extensive delay. So I would highly recommend e-filing returns, making your payments online via irs.gov or EFTPS. But guys, Today, we're only 60 days away from April 15th, and there are no talks about extending the tax deadline, but you can get an extension. So one of the advices that I like to give you guys is go ahead and file your extension if you know you're not going to meet the April 15th deadline. Because it does give you more time to file the return. Now, it does not give you more time to actually pay. So if you owe and the money is due on April 15th, the tax return may not be due, but the money needs to be due. So if you think you're going to owe something, even if you don't end up owing it, you'll get the money back when you file your return between April and October 15th. But I encourage people to just get that headache off you. Make sure you're not overpaying in taxes, like even with interest and penalties, because to be honest, guys, you could use that money to grow in your business. I'm never on that boat that, you should be giving your money away that you can reinvest in your business. But anyway, guys, that's what I have for y'all. I got to get to work. I love you guys. Thank you for joining me. And until next time, y'all get your business in shape. Get fit. All right. Reach out to us and don't forget to take your profit in the right direction. And that's up. Bye, y'all.
Art